How to bonus back after losing it all. John Paulson's story. A journey from setback to redemption. In the world of hedge funds, success and failure can come in the blink of an eye. One moment you are on top of the world, the next you are staring at the wreckage of a collapsed empire. This is the true story of John Paulson, a hedge fund manager who made billions by predicting the 2008 financial crisis, only to lose it all in the years that followed. But what happened next? How did he rebuild and rise from the ashes? Today, we dive into one of the most remarkable comebacks in finance. John Paulson is one of the most successful hedge fund managers of all time. His breakthrough moment came during the 2007-2008 financial crisis when he made an extraordinary bet against the US housing market. Paulson had identified the impending collapse of the subprime mortgage market, and he famously bet billions against mortgage-backed securities. When the housing bubble burst, Paulson made $15 billion in 1 year, personally netting around $4 billion, which was the largest single-year payday in hedge fund history. This success elevated Paulson into the upper echelons of hedge fund managers, and for a while it seemed like he could do no wrong. His hedge fund was one of the largest in the world, and he was widely hailed as a genius for predicting the collapse of the housing markets. All of that is pretty interesting, but our main question right now is what happened after the crisis struggles. We want to know about what happened after the financial crisis. Let's dive into it. However, after the financial crisis, Paulson faced major challenges in the years following his big win. His hedge fund struggled to replicate the same success. Paulson made several other big bets, including a bet on the recovery of the gold market, which ultimately did not yield the same dramatic returns as his 2008 success. His fund faced large losses and investor confidence waned. In 2011, Paulson's firm began experiencing significant outflows of capital. Investors were pulling their money out of the firm, disillusioned with the lack of returns after his big 2008 win. In 2016, Paulson's main hedge fund, the Paulson Advantage Fund, lost around 30% and his firm was forced to close several funds. In 2017, Paulson's firm had seen billions of dollars in capital exit. The losses were staggering, and Paulson faced intense pressure. The hedge fund industry began to question whether Paulson had lost his touch. The media buzzed about his decline, and many investors who had once trusted him are now wondering if he could come back from such a heavy loss. So now we understand very well what happened after the big win. But our main question right now is what happened for his mental health. As everyone knows, everyone in the hedge fund industry is struggling with their mental health when they have already been with a huge success, and then one day they will start to have the another part of the incoming success, which it would be to have the failure. And the failure is absolutely a part of the industry, and absolutely is a part of what you are going through, of what you are doing for a service to others, instinctual investors. So every time you're feeling that you have a failure right now, you have already touched a new level of the bottom, that's a part of the incoming success. That's exactly what Paulson had in his story, and that's exactly what he has applied in his own journey. Let's dive in, let's discover it together. For a while, Paulson's future in the hedge fund industry seemed uncertain. He had tested massive success, then fallen from grace. There were rumors about his mental state, and like many hedge fund managers who experienced such a dramatic reversal, he must have struggled with the emotional toll of losing large sums of money, disappointing investors. Paulson admitted to feeling the weight of the losses and the pressure of trying to repeat past success. The stress of managing billions in assets, coupled with the responsibility to his investors, must have been crushing, but instead of walking away from the industry, Paulson chose to fight through. Paulson chose to fight through the difficult period and focus on rebuilding. He focused on rebuilding. It means that's what you need to do right now in your situation. You need to focus on rebuilding. Rebuilding what you have already done, rebuilding your strategies, rebuilding your firm, rebuilding your own firm's culture. It could be several things, but focus on rebuilding. It will absolutely help you to come back from the darkness. That's exactly what Paulson showed us in his story. He focused on rebuilding, and he focused on coming back and be the light and become the light that everyone wanted to have around them. He showed everyone that even if you have already went to the darkness, you can absolutely come from the darkness. You will come back, and once you are back, you will dominate the industry. You will do the biggest comeback finance industry at the hedge fund manager who choose to rebuild, refocus, and keep going. Let's take a look on what he have already sharpened for a happy end of his story. You will also sharp a happy end of your own story, because if he did it, you can absolutely do it. Instead of trying to replicate his previous mega bets, Paulson shifted his strategy. He began to refocus his efforts on more conservative investments, focusing on risk management and more. That his best success were extraordinary, but the future performance would vary. Over time, Paulson returned to more traditional long-term investment strategies, minimizing risk and recalibrating his approach to managing funds. In recent years, also, Paulson's firm has not returned to the same level of success that it enjoyed during the height of his fame. He has been able to maintain relatively stable and profitable business. He also shifted more into private equity and venture capital, diversifying away from hedge funds and creating new avenues for his wealth and influence. So that was Paulson's story. My main question to you right now, you may be going into the same story. Most likely you are in different parts. It could be you are in the first part of his story. It could be when he started to have the big wins. Or it could be after the big win, when he started to struggle to manage the expectations of the investors, and when he started to struggle to actually achieve the same success again. And then from there he started to lose. So the main question right here, if you are in the first part or even in the second part, you need to understand 5 lessons from his own story to make sure that you will absolutely have a happy end as he had it. First of all, Paulson's massive success during the housing crisis made him a legend. So he built his own ego. And you know very well, and everyone know about it, if you are in the finance industry, especially in the finance industry, when you will start to have an ego, the market will absolutely humble you down. That's exactly what happened for him. Markets changes, and strategies that work one year may not work the next. He showed that a great track record doesn't guarantee ongoing success. Even if you made it big today, that it doesn't mean that you will make it big tomorrow. So don't let the ego that comes from the one big success kills your gains for later on. Make sure to control your emotions. You need to control that. You need to elevate. The number 2 lesson is, despite the financial losses, Paulson didn't give up. He adapted his strategies and keep moving forward, finding new ways to stay relevant in the industry. So whatever you have already went through, whatever happened for you, whatever you went through with your hedge fund, even if you have already lost everything that you have, you can absolutely come back again. Not only Paulson that went through the same losses, Bill Ackman also the same losses, and he came back. Right now his firm are managing billions of dollars. So you need to come back again. You need to find new ways and come back to the industry, stay relevant, absolutely find your way up. Don't give up. Number 3, what you need also to focus on. Like many hedge fund managers, Paulson experienced the personal stress that comes with managing billions and facing large losses. His journey underscores the importance of mental health and resilience in high-pressure industries. What you need also to focus on is you need also to focus on your own health. You need also to focus on your own mental health. Don't let it to harm you. Don't let it to affect you. Don't let it to harm your own personal life, your own family, your own environment. Don't let the big numbers, the numbers that's going up and down all the time, harm your nights, harm your sleep, or harm your life. Don't let it. You need to have emotional tool of risk. You need to understand that if you can manage less, but you will have less stress, maybe it will not affect you the same things that it may affect you if you have managed it more. Maybe managing less, it would become better for you for the long term, because if you can only handle that for the long term, so you will have more energy, you will have more hunger, and you will have more passion to manage more. So for the long term you are winning. But if you will manage a lot for the current time, maybe for the long term you will not win, because you will lose, or you will start to burn out. You will start to see that you can't actually generate gains or generate any return on these investments. Do you understand what I'm talking about? I hope you do, because if you do, so you need to do something with that, because that's exactly what you need to do in order to be inside the game. Because that's the main question right here, is would you stay here in the game for the long term, or would you just be like the others? They will just let the market eat them up and throw them away. Number 4, what you need to also to focus on. Paulson didn't cling to past strategies. He shifted into private equity and venture capital, demonstrating the need for flexibility and the willingness to evolve with the times. What he has done right there is pretty interesting. He shifted to private equity and venture capital. So he wanted to shift the whole focus into a completely new focus, which is it was absolutely better for him, because right now he can do more and he can manage more and he can do better. So sometimes if you are into one sector, this sector isn't going as you have already planned it, and you keep trying and you keep doing, maybe you're winning big one time, you're losing 2-3 times, and in the end you're coming break even. Maybe you need to do something else that is related to the same sector but can actually generate to you not 100% sure return, but most likely more than what you have already tried before. It's exactly what he have done when he started to shift into private equity and venture capital. So he started to actually have a profitable business right there, because right there he started to manage more metrics and more methods and more repeatable daily routines that will make sure that he will stay profitable. He is not making the same money as he made it before, but I'm 100% sure that he's making way more than what any other hedge fund manager has been in the market for 5 to 10 years. If not for the short term, but he do it for the long term. He going through less stress, more profits, and more scaling up. Right now he has also influence, so he can also scale that and leverage that. Number 5, what you need also to focus on after his fall, Paulson learned to better manage investor expectations, explaining that large returns are not always guaranteed, and the risk management is just as important as chasing high rewards. We need also to focus on that all the time. We're doing the biggest mistakes in our lives, in your career, or everyone in their own careers, when we're giving high expectations to anyone who we will start to have partnership with. We will tell them we will do X and Y, but in the end maybe we will achieve X and Y, but they will start to ask for more because you have already promised for that, and they would like always to have more. They would like always to generate more, to get return more. So what you can do when you see that is you can do one thing. In the beginning, you need to give them the expectations. You need to have lower expectations, lower down the expectations as much as possible, and with the time you can over deliver. And don't give anything as a guarantee. Don't give that. If it will help you to increase the asset under management for the current time, but for the long term, you will lose your name, you will lose your personal brand, and you will run your reputation. For a couple of millions, it will not make sense for you, and it will not make sense to anyone. But if you are here for the long term and for the long game, for the long play, you will absolutely win it. You will absolutely have it. The main question right here is it better to have low expectations and over deliver and have satisfied clients or investors for the long term, to have only few investors who will only ask for more all the times and always blame you for not generating more? It will not make sense. Manage expectations upfront. So that was everything for John Paulson's story. I hope it was something interesting for you, and I hope you have gained something from it, John Paulson's story. And if you are looking to raise up capital for your own hedge fund, and you can take a look on those videos in the description below. You will have a step-by-step guide on how you can raise up capital from our current modern market. And if you have gained any value from this video, so you can just subscribe to this channel right here. So that was everything for today's video. I hope it was something new, and Merry Christmas.